Hey Bubby Trades! I wanted to do a video analysis update on my favorite stocks for me personally to buy and hold for the long term for March 2021 and beyond. Okay, so we have a lot to get into this video, but first I want to address a lot of you guys are pretty scared, right? Because the market sold off a little bit. So let's just do a little update on the market first. Way back in December 26, I said, hey, we have clearly more upside in the market based on a very basic bull flag. We're going to reach 392. Then on February 10th, after we reached 392, I said, hey, I'm still long with cash. I'm looking for a dip to the 380s to complete wave 2 from the 129 low. Then we're going to rocket higher. I said the SPY sectors are still bullish. I really like XLV, XLE, and IYR giving us a baseline for the stock market. Okay, that's not the first time that I've used XLE, XLV. I actually always analyze the stock market as a whole. I analyze the important sectors of the stock market as a whole. I think it's really sad that a lot of people are coming out and saying, oh, this is just like, last February. I'm like, what do you mean it's just like last February? The banks were down 15, 20% in February of 2020. The airlines were down 15, 20% in February 2020. The cruise lines and all of the oil stocks were down 15 to 20% in February of 2020. Now, this February 2021, it was the complete opposite. JP Morgan, Bank of America, Wells Fargo, up 13, 15, 19%. The airlines, JetBlue and Southwest Airlines and Delta Airlines, they were down 15, 20% last February. They're up 15, 20% this February. The oil stocks, the exact same thing. Okay, so we're using the oil sector, we're using the important components of the S&P 500 to gauge where the S&P 500 is going. So on January 29th, I said, hey, there's, no reason to be bearish the stock market because XLE is making higher highs. It completes a large wave 1, a wave 2 correction, and now is incomplete. And the minimum upside target for XLE is 51. So that's how we knew the stock market had a lot higher to go. I just want to show that we were also very bullish on the airlines. So I tweeted this about JetBlue on February 2nd. I said JetBlue, I love JetBlue. It's going to 20. I also said that I really love JetBlue in the long term. We'll talk about why we're bullish on the airlines, why we're bullish on the oil sector in the long term. But the point is, this was nothing at all like February of last year. If you watch the entire stock market, if you just stare at SPY all day, you can draw as many wedges and lines as you want, and you will make that assertion. Okay, CCL, Carnival Cruise Lines, this is just to show that we were expecting a large run-up in the cruise lines. We were expecting a large run-up in oil. We were expecting a large run-up in the airlines and the oil stocks and the cruise lines, and we got it. We were also expecting a pullback. We were also expecting a pullback into the 380s, and that's where we are. So we had cash ready to buy dips, and now we have some really, really good opportunities for myself personally. First, let's just look at oil real quick. So oil is making new highs, right? Oil broke above this June high. That's extremely bullish. And what we're going to do is we're going to take our Andrews pitchfork. We're going to connect this low with this high and this low. We're going to continue to expect that XLE is going to keep going higher until the median of this Andrews pitchfork is reached. We can see that's going to be much higher, okay? Now that we've broken above this wave 1 high, it begs the question, how high is oil going to go? We're going to look at crude oil too. But if we just look right now, at a pretty standard wave count, in Elliott wave theory, wave 3 is 161.8% the length of wave 1 generally. Okay, so this is our wave 1 low. Our wave 1 low is 22.88 for XLE. We've broken above the high of wave 1, so that confirms an incomplete bullish sequence. We're going to go off on a limb and say that this is going to be a wave 3. We're going to show with crude oil futures why we're pretty confident this is a wave 3. Okay, so this is 46.88 is our high. So we're going to go to 46.88, and that is our high. So oil, we believe, is in a much more bullish cycle than most people expect. That means the market is a lot more bullish than people expect. So the minimum wave 3 target in Elliott wave theory is 161.8% the length of wave 1. So we're going to expect that XLE is going to keep going higher. The wave 3 target is all the way up here at 61. Let's look at crude oil futures real quick and talk about what this might look like. So we go to the futures market overview. We can go to crude oil. Let's talk about kind of the path that we're going to look for the market to take going forward. So the way that I'm kind of expecting this to play out is that we're going to get money to flow out of the airlines. It's going to flow out of oil. It's going to flow out of the cruise lines and the banks, and it's going to flow back into the usual suspects, large cap tech and stay-at-home stocks. Okay. So we look right here. This is the March low. Oil goes clearly on a wave one rally higher, completes an A, B, C correction, and then it passes the 161.8% extension of wave one. That means oil right now, crude oil futures, a barrel of crude oil, is clearly in a bullish impulse. It is completing a wave three right now. At a certain point, we are expecting oil to correct into a wave four and then go on another wave five higher. We don't short this correction because corrections in Elliott wave theory are not guaranteed. Impulse waves can extend indefinitely. That's why we don't short corrective waves. We have cash to buy dips. Okay, so we are expecting that oil, some of this money is going to flow out of oil. I don't think oil will get too much lower than $60 per barrel before it starts a wave five higher. In Elliott wave theory, wave five is at least the length of wave one. We place that at the low of wave four, and that's going to take crude oil, a barrel of crude oil, into the 70s. Okay, so we're expecting much higher in the oil stocks. We're expecting much higher in the market. I do expect that at a certain point, we're going to see money flow out of oil, and it's going to go flow back into large cap tech. Okay, this is the housing market. This is real estate. So when people say, oh, the market looks just like it did last February, that looks ridiculous, right? Because the real estate market is in a huge bullish impulse sequence. Okay, so this is a wave one from the March low. It consolidates sideways into an ABC correction and puts in a wave two low. Then it breaks above this wave one high from June, and it forms another wave one, another wave two correction, and then it breaks above both of these wave one highs. What's this mean? This means that IYR, the real estate sector, has confirmed an incomplete bullish sequence to the upside. Okay, this move for wave one was from 323 to 68. That's about 3.5, 4 months. So we expect 3.5, 4 months from now, IYR, the real estate stocks, are going to be at 106. If we're expecting the real estate sector to go 20% higher, and we're expecting a barrel of crude oil to go much higher, we are expecting the stock market to go much higher. Okay, so let's get right into the charts. These are my favorite picks for 2021, March 2021 and beyond, for me personally as a long-term shareholding investor. Okay, this is my favorite one right here. I love HUYA. Okay, let's look at the shorter term time frame of HUYA. HUYA, HUYA, completes a wave one from this low. It forms a base while it consolidates into a wave two correction, and then it forms another wave one and another wave two. Okay, so I believe HUYA is nesting right now, and this might be probably the only one in this video that I would say is a really nice, short-term setup as well as a long-term setup. If we take the length of leg one in time and price, that is going to give us a minimum wave three target of 43. Where does 43 come from? Well, in Elliott wave theory, a wave three is at minimum the length of wave one. So this was a 6-week move. So I'm expecting in the next 2 months, in the next 2.5 months, in the next 3 months conservatively, we're going to see HUYA go on another leg higher so long as 23.90 holds as the low. That's the theoretical stop loss. And then the invalidation level is 18.14. If those levels hold, HUYA is going to go on another wave three of three higher. Okay, this is a very powerful Elliott wave nest. HUYA is going to go to 43 in the next 2.5, 3 months. I think it might be more diligent for me personally to be looking at HUYA as a long-term investment opportunity. So that's what we're going to do right now. So if we look at HUYA, this is a large degree wave one from the IPO. And then this is a large degree wave two correction to correct the IPO. It puts in this low in March, and then it goes on a large wave one higher from this March low. So I really like HUYA here as a long-term shareholder. So this is a 1-2 from the IPO, and then from the March low to the September high, we have another 1-2, and then we've broken out above this high from late August. And so we are expecting that HUYA is showing a bullish sequence to the upside. This is a wave one and a wave two, a wave one and a wave two. HUYA has much, much higher to go. It's definitely going to break above this IPO high of 50. And just, to get a general, time target estimate, we take the depth of this base and we place it at the high of this base, that is going to take Huya all the way into the 80s. So what I'm planning to do is to get into Huya, have a stop loss below 23.90, and I'm going to hold until Huya reaches 80, 82, high 70s. I'm going to sell half of my position, book in profits, remove the original risk of the trade, and then I'm going to keep holding Huya for a long term. This is a very powerful Elliott wave nest. 1, 2, 1, 2. I believe Huya is going to explode in the long term. Okay, another Chinese name I really like. We've gone over this one a lot, but I just want to make it clear. I love Alibaba here. As a long-term shareholding investment. For myself personally, if we look at the 1-year chart. This is a very clear wave count we talked about. This might also be considered a shorter-term trade, but I like this as a shareholder. What I am planning to do is say that Alibaba has gone on a wave 1 impulse higher. It's completed an A, B, C correction from this high, and then it puts in a wave 2 low that I believe is very important. So if this wave 2 low holds of 211, I am looking to buy and hold Alibaba shares and hold them for a very long time. Okay, this low right here is 111. I'm expecting that Alibaba will go the length of wave 1, very conservatively placed at 111, and that is going to take Alibaba to 360. This is from 323 to 1028. Okay, that's about a 6-7 month move. So in the next 6 or 7 months, I'm expecting that Alibaba will be over 360. I'm expecting it will be over 360 because in Elliott wave 3 is at minimum the length of wave 1. It's actually 161.8% times the length of wave 1. So 360 is very conservative. We could actually see Alibaba in the 400s. We could see Alibaba in the 400s this year. But regardless, after wave 3, I'm expecting a shallow, mostly sideways, wave 4 correction and then a wave 5 higher. Okay, so I love Alibaba. I love Alibaba as a shareholder, and I believe there's a very good risk-reward ratio so long as 211 holds as the low. This is going to be an extremely important wave 1, A, B, C correction, wave 2. Okay, if this low holds for Alibaba, there's a ton of upside. There's a ton of upside. Let's just look at the shorter cycle real quick. What could this, possibly be? I think this is either going to be a wave 1, 2, 3, 4, and then we're expecting a wave 5 higher. Or this is a completed wave 1 and wave 2. But I think regardless, there's going to be another leg higher in Alibaba in the short term. And then I really like Alibaba at this level. There might be, a dip to hold, through in the future. I think a trader theoretically might see some gains, wiped away once this wave 5 pullback is complete. But regardless, as long as this 211 low holds, incredible upside for Alibaba as a shareholder for me. Okay, so with length of wave 1, A, B, C, as long as this wave 2 low holds of 211, we have a lot more upside to expect in Alibaba. I love Alibaba here. Okay, so let's do a few more. This is Lawrencetown Motors. So this was on my video earlier in January. I did a similar video about my favorite long-term investment ideas for myself personally, and this was one of them. This is another great one. This is RIDE, R-I-D-E, Lawrencetown Motors. If we take the beginning of wave 1, connected with the high of wave 1 and the low of wave 2, we have a gorgeous Andrews pitchfork. Look at that reaction on the median of this pitchfork for this daily wick. The median is proving to act as a magnet. Now we're having a reaction on the lower bound. So a tight stop loss is going to be 16.05. The invalidation level for me is 12.80. If those levels hold, I'm expecting that this is a massive 1, 2, 1, 2, 1, 2 Elliott wave nest. There's much more upside for Lawrencetown Motors. But more importantly, I think this is a massive leading diagonal. So a lot of traders, when they're new to trading, they're going to look at something like this and they're going to say, oh, this is a rising wedge. This is a bearish pattern. No, that's called the rookie wedge. Okay. The right way to view this pattern is that this is a leading diagonal. Okay, this is extremely bullish. This is exactly what you want to see, kind of the rising wedge action. But then the kick out is not your impulse down. It's your corrective wave 2. It's your final bear trap. It's your final shake out the weak hands. And then you are going to get your reward of blasting higher. So I believe Lawrencetown Motors, for me, is a great opportunity to get into the small cap EV sector. I love Lawrencetown Motors here. A tight stop loss is going to be 16.05. The invalidation level for me is going to be 12.80. I'm planning to hold Lawrencetown Motors and these small cap EV stocks for several years. Okay, I wouldn't really even think about selling a position here until Lawrencetown Motors is in the 80s, the 90s, 100. Okay, and if we look at this massive wave one move, and remember that that's only wave one, and that we are expecting that wave three will be much longer than wave one, have a shallow wave four correction, and then a wave five higher. I believe that this is an opportunity to, by comparison, buy PayPal in 2016 and buy Square Cash in 2016. And that's what I think these small cap electric vehicles are. So we're going to keep looking. I see all these small cap EV stocks, as future Neos, as future Teslas even. Okay, so that may seem outlandish, but hey, Square Cash and PayPal being big monsters in 2016 was outlandish. I think the small cap EV sector, Acromoto, Ride, Lawrencetown Motors, and Li Auto, and a lot of people laugh when I say this, but I even believe Nikola too is going to be our next wave of Square Cash and PayPal in 2016. I might even say that it's going to be close to Google and Apple and Amazon and Microsoft in the 2000s. Okay, I love the small cap electric vehicles here, not because of fundamental reasons, but because there are incredibly bullish setups on all these recent IPOs that are in the EV sector. Okay, let's go on another one right here. This is Li Auto. Very similar setup to Lawrencetown Motors. So 1, 2, 3, 4, 5 completes a large degree wave one. If we take the beginning of this wave one connected with this wave two low, gorgeous Andrews pitchfork. Great reactions on the median, great reactions on the lower bound. Okay, I believe right now that we have completed an ABC correction from this high. The stop loss for me is going to be 17.92. The invalidation level is going to be 15.61. I'm looking to buy and hold shares of Li Auto and Lawrencetown Motor for a very long time. Okay, and this is going to be my exposure to the small cap electric vehicle sector. Okay, so this is a wave one. An ABC correction puts in a large degree wave two. If we take the length of wave one and place it at the wave two low, we're going to see Li Auto, go into the high 50s. Okay, so I really like, and remember that's going to be extremely conservative. I actually think, I wouldn't even consider selling Li Auto until 100, because remember that's a very conservative target, because wave three is actually 1.618 times the length of wave one, and then wave five is at least the length of wave one placed at the low of the shallow wave four correction. So I love Li Auto. Let's just go over the count real quick. 1, 2, 3, 4, 5, large degree wave one. A, B, C correction, large degree wave two. If these lows of 17.92 and 15.02 hold as a low, then I am expecting Li Auto and Lawrencetown Motors are going to be incredible opportunities to get exposure to the small cap electric vehicle sector. Okay, I'm going to throw a fastball a little bit. We're going to go to Pfizer and Merc. So Pfizer and Merc, these are really nice dividend investments. We can go and look up Pfizer and Merc's dividend history. I'm not going to do that in this video. Pfizer and Merc each have an over 25-year dividend history that I would encourage anyone to look up. But basically, these companies have not missed a quarterly dividend payment in their 25, 30 years of paying their dividend history. So they are really well known in the dividend investing sector. And I think right now that if we look at the Elliott wave analysis and the classical trading analysis, we can see Pfizer and we can see Merck as opportunities as dividend investors to lock in an incredible dividend that I believe will pay us, or pay me personally, for a very long time. So for Merck and for Pfizer, the idea is that I will be locking in a dividend at these levels, and then I will be holding for a very long time. And I'm expecting both of these stocks to nearly triple. So the idea is that I will be locking in a dividend payment when Pfizer's at 33, Merck's at 72, and I will be continuing to collect dividend payments as I ride these stocks, all the way up to 2.5, 3 times their current value. Let's look at the wave count and see, where I would get an idea like that. Well, first, if we take this low connected with this high and this low, then we have a gorgeous reaction on the median of this Andrews pitchfork and gorgeous reactions on the lower bound of this pitchfork for Pfizer. Now, a lot of you guys have asked about Pfizer in the short term. We have seen Pfizer show up on our low implied volatility straddle and strangle screeners. Okay, so I am expecting a big move in Pfizer, but I still think it's best to view Pfizer as a long-term investment idea for me personally. Okay, so this is a wave one, an A, B, C correction puts in a large degree wave two. Then we have another wave 1 and another wave 2. I believe Pfizer, so long as 27.88 holds as the low, Pfizer at the very minimum is going to 62 because that is the length of wave 1 places the wave 2 low. I actually think that is extremely conservative, and I will be holding much longer than 62 for a few reasons. One, in Elliott wave theory, wave 3 is 1.618 times the length of wave 1. So just taking the length of wave 1 and placing it at the wave 2 low gives me a minimum target. So, how am I going to estimate, my long-term target? I'm going to take the depth of this base and place it at the high of this base, and that is going to give me a long-term price target of 87. So I believe that Pfizer is going to nearly triple by the time I even consider selling it. So I'm going to be getting very nice dividend payments along the way. Okay, you don't even really need wave theory for this one. This is an incredible base. And if we take this low, connected with this high and this low, we have gorgeous reactions on the lower bound of the pitchfork. So I'll also be looking, when will Pfizer reach the median of this long-term pitchfork? So the invalidation and the stop loss level for me is going to be 27.88. If those levels hold, I'm expecting Pfizer to go much higher. And I think I'm going to lock in a dividend at 33.49 on a company that's in the dividend aristocrats and hold this for a very long time. Let's look at Merck. It's basically the exact same thing. Merck also has a very nice dividend history. Pfizer's is slightly more impressive, but Merck's been paying their dividends. Hasn't missed a quarter since 1990. I would encourage anyone to go actually look that up. Okay, so make sure you actually look up their dividend history and always do your own due diligence, as it's not investment advice. But I love the idea that I'll be able to lock in a dividend at these current levels on Pfizer and Merck. Kind of have a, not necessarily a safer play, but I love the idea of getting paid dividends as part of my portfolio. I think it's really important. A lot of traders forget that they're also investors, and we need that compound interest, and dividends is honestly the best way to do that. Okay, so whenever I see that a stock that regularly pays its dividends has a really nice Elliott wave setup, like ExxonMobil did last year, I take extra importance on these setups. So if I look at Merck, very similar to Pfizer, 1, 2, 3, 4, 5 puts in a large degree wave 1. A, B, C correction puts in a large degree wave 2, and then we go on a wave 1 and a wave 2 higher. So this March low of 65 is the exact same invalidation as Pfizer's, is the exact same stop loss as Pfizer's, and I don't believe either of those lows will be broken. I'm fairly confident we've put in a very important wave 2 low for both of these stocks. If these wave 2 lows hold, I'm expecting that Merck at the very minimum is going to go the length of wave 1, place of wave 2 low. That's going to take Merck to 137. If I take the depth of this base and place it at the high of this base, that's going to give me an estimate for a long-term future price target of 173. Both Pfizer and Merck breaking out of massive bases over 20 years of consolidation. I love both of these setups, and the fact that they pay incredible dividends and have great dividend history is even better. Okay, let's go through a few setups that I don't really believe are primed yet, but if I got a dip, these are some setups that I really want to be all over, and I'm going to be watching these setups carefully if I get a dip. Okay, so FSLR, this is the first and foremost important one. Okay, so just kind of, I know some of you guys are going to ask, how am I getting this possible length for this move down? Well, in Elliott wave theory, a lot of times the entire ABC correction can be counted in 5 waves. Now, it's going to confuse a lot of people because they're going to say, wait, I thought the 5 waves moves were the impulses. And yes, that's correct. The 5 waves moves are the impulses, but sometimes, most of the time, the entire ABC correction, all 3 of the waves, can be counted as 5 waves. And that's kind of how you know that the ABC correction is going to be complete. We can actually look at Alibaba and see a very nice example of that right now. How this was, this was 1, 2, 3, 4, 5. Looks something like this. 1, 2, and then 3, 4, 5. And then once we got to, once we got this 5th wave down, we knew that this ABC correction was complete. So sometimes an ABC correction can be counted as 5 waves for all 3 waves. Okay, don't want that to confuse anybody. I just want people to know that's where I'm getting the length of this possible leg down if we get it in FSLR. I'm not saying that this will happen, right? No one in the right mind would short, this move. But if we got it, it'd be an incredible dip buying opportunity. Okay, So if we take the length of this first, kind of impulse and place it at this high of this wave 4, that's where I'm getting that we could see FSLR below 72. If I got FSLR below 72, I would take that as an incredible buying opportunity. Okay, I'm going to clear that up because I don't want anyone to be confused by that. But anyway, let's just go through the FSLR wave count on the shorter term time frame and then talk about why I'm so excited about FSLR on the longer term. So we take this low connected with this high and this low, we can see an incredible opportunity for FSLR on many time frames if we get below 72. So, this, I wouldn't even look at FSLR if we didn't get to 72. Some long-term investors might, see what I'm about to say and say, hey, I like it at 80, when you hear what I'm about to say about FSLR. But I think it's going to look something like this, where we go 1, ABC 2, and then we go 1, ABC 2. So we're completing a nest on this smaller time frame. I think what we're also going to be more interested in is when I zoom out to the 10-year chart and see the nest is being completed on the longer term time frame. So if there's a dip in FSLR, this is a top priority buy for me as a shareholder. I think this, if I got FSLR at 72, I'd probably drink a glass of wine. Okay, so let's see. And that's the thing. Wave corrections in wave theory aren't guaranteed. So FSLR could complete this wave C right here and just run off. That is completely possible. I'm just saying if I got it below 72, I would be extremely excited. Let's look at this. 1, ABC 2, 1, ABC 2. Okay, so if I got FSLR below 72, that would complete a massive nest. As a leap option call trader, I could definitely see a lot of profit being made going back to the median of this pitchfork and going back to this high of 112. Okay, but I love FSLR. If I ever got to buy it below 72, I would buy as many shares as I could with a stop loss below this low of 59. Okay, let's talk about why I'm so excited about FSLR on the longer term time frames. We kind of talked about this in my last video, but look at this. This is why some people might see this and say, hey, I'm not waiting for 72. I don't want to see FSLR run off. And honestly, I think there's a lot of merit in that. I'm kind of a perfectionist. I want my my perfect entry, right? But sometimes you don't get your perfect entry, and as a long-term shareholder, you'll see FSLR run off and say, damn, I was waiting for $6 lower, and it just ran off on me. So I think there's plenty of merit to say, hey, if this is completing a massive 1-2-1-2 Elliott wave nest, why would I wait for 72 and risk it running off? I think there's plenty of merit in saying that. I'm just saying the importance of, wow, if I did get an FSLR at 72, I would, as I said in my last video, sell my kidney. That's hypothetical, but that's kind of the importance of that dip. Why is that dip so important? Well, look at this. This is a 10-year nest. So what's a nest? A nest is a 1-2-1-2 Elliott wave completion. Okay, so Elliott waves, they're fractal in nature. They can be subdivided into smaller degrees. This is the largest degree of FSLR. Large degree wave 1, A, B, C, large degree wave 2. Smaller degree wave 1, A, B, C, smaller degree wave 2. Now what are we doing? Well, we've broken out into a big wave 1 from the March low, and then we're putting in, at some point, a wave 2 from this low. So I think that this is going to be an extremely attractive buying opportunity. If I ever saw FSLR at 72, that's kind of my sell my kidney level. And the reason why is that this is a 1 ABC 2, 1 ABC 2, 1 2 being completed right now. This is why some people might see this and say, okay, I'm not waiting for 72, because if we look at this, we're going to see FSLR go, definitely, in my opinion, go break above this high from 2008 of 317. Okay, so I love FSLR in the long term. If I got it below 72, that would be a quote unquote sell my kidney level. Okay, this is an airline. This is Ryanair. So we talked a lot about how we're extremely bullish the stock market in the long term for a couple of reasons. The long term charts of Chevron, which I can just go over right now, and the long term charts of JetBlue are sorry, I didn't mean to do Chicago River Company. Chevron. The long term charts of Chevron and the long term charts of JetBlue. You can recreate these on just about every oil stock and just about every airline stock. But I'm just trying to show why when someone says, oh, this was just like last March, or this was just like last May. That doesn't make any sense, right? Because Chevron put in a generational wave 2 low last March, right? So this is the Chevron chart: 1, 2, 3, 4, 5, wave 1, A, B, C correction, wave 2. Okay, so oil is not just going to be bullish, for the next couple of months. Oil is going to be bullish for an extremely long time. Okay, this is a massive wave 2 low that we will never go below, and this is a generational wave 2 low. We're going to break above this wave 1 high. Chevron's going to explode into the 300s, into the 400s, okay? So what's that mean? That means that not only will Chevron go up, the price of oil, we can expect will go up for a very long time. We can talk about the commodities bull market in other videos and why it's so important for us to protect ourselves from inflation. But if we look at Chevron right now, 1, 2, 3, 4, 5, wave 1, ABC, wave 2. If we believe Chevron put in a generational wave 2 low, we're going to laugh at people who say, oh, this is just like last February, or this is just like last March. Are you kidding? Right? If we're expecting that Chevron is going to rocket above this wave 1 high in the long term and go into wave 3, wave 4, wave 5 higher, we're expecting the whole stock market is going to be exploding as oil explodes. And let's look at one more stock. I've gone on this in other videos, how we can recreate this on basically every airline. This is JetBlue in the long term. I tweeted about how I really liked JetBlue as a long-term setup, and this actually did play out in the short term too. I said JetBlue was a great long-term and a great short-term setup. I said JetBlue put in a generational wave 2 low in March, and we saw this run up in JetBlue just to kind of go to show that we knew that cruise lines and airlines were going to be, and oil was going to be getting their money. Right now we're expecting some of that money is going to flow out back into the large cap stocks. Okay, but this is JetBlue. Very similar story to Chevron. What's the whole point? The JetBlue and Chevron decide the market? Not necessarily, but if large oil companies and airlines are going to go up for a very long time, then the stock market is going to go up for a very long time. Okay, and we can recreate this count on American Airlines, Delta Airlines, Boeing, Southwest Airlines. But this is JetBlue, very clear, large degree wave 1, ABC correction, large degree wave 2. Okay, so this is another reason, just like Chevron, where when someone says, hey, this is just like last February, just like last March. No, it's not. No, it's not, because JetBlue and Chevron had generational buying opportunities last March because they put in generational wave 2 lows. Now JetBlue is going to go above this high of 27.36, and it's going to explode. At the very minimum, JetBlue is going to double, or nearly double to 38 to 31. Okay, it's going to go to the median of this pitchfork, and that's very conservative. Because in Elliott wave theory, wave 3 is actually 1.618 times the length of wave 1. Okay, so let's look at another airline right now. This is Ryanair. Let's just look at the long-term picture of Ryanair real quick. Another airline, surprise, surprise. This is a German airline, by the way. 1, 2, 3, 4, 5. This is RYAAY, Ryanair. On the long-term cycles, 1, 2, 3, 4, 5, large degree wave 1. A, B, C correction, large degree wave 2. So we believe this is a generational wave 2 low. We believe that Ryanair, like all the airlines, is going to explode above this 2018 high, and it is going to enter a massive wave 3, a wave 4, and a wave 5 higher. Okay, let's clear this. Let's look at Ryanair on kind of the shorter term time frames. So this is also kind of another reason to be bullish the market kind of in the intermediate term. One, I just posted a really nice setup on Huya. I think we're ready for that now. But if we look at Ryanair, this is completing a very nice nest. Okay, so this is a wave 1. This is a wave 2. And then this is going to be another wave 1. And then we complete an ABC correction and put in another wave 2 low. So I really like Ryanair more as a long term. I like Ryanair much more in the long term. In the short term, I expect to go up, definitely. But in the long term, I like it even more. So this is RYAAY. This is a German airline called Ryanair. And this is completing a really nice nest on the shorter term cycles. And we just saw on the long term, it put in a generational wave 2 low in March. What's the point? Well, if JetBlue, Chevron, all these oil stocks are, going into generational bull markets, well, so is the stock market, right? And we're not going to get into the full-on SPY count in this video, but this is a wave 1 and ABC correction. So Ryanair, I love it in the long term. If 97.97 holds as the low, Ryanair is going back to the median of this pitchfork. It's going the length of wave 1 in time and price, places this wave 2 low. So this move was from 1028 to 1207. This was a 6-week move. I believe in the next 6-8 weeks, I would say 2.5-3 months, to be safe, we're going to see Ryanair go reach 133. Okay, so more upside for the airlines is in store. More upside for the stock market is in store. This is mostly focused on Ryanair, RYAAY, being an incredible opportunity so long as this low of 94.68 holds as the low. If 94.68 holds as the low, I love buying and holding, for myself personally, Ryanair shares, if we remember that this was a large degree wave 1, and then this was a large degree wave 2. So it goes large degree wave 1, and then a large degree wave 2. So in Ryanair, we go to the long-term charts. This is a large degree wave 1, and then a large degree wave 2. So if 93 holds as the low, I love buying and holding shares of this stock. Okay, it's going to go up in the long term with JetBlue, and it's going to go up in the long term with Chevron. And all these stocks, the airline stocks and the oil stocks, are going to go up in the long term with the stock market. Okay, let's do a few more. This is AT&T. I love AT&T. I've been watching this for a while. It is starting to show up on our straddle and strangle screeners, letting us know it has very low implied volatility. So what I'm trying to do is that AT&T goes on a wave 1 higher. It completes an ABC correction to put in a wave 2 low. Then it goes on another wave 1 higher, puts in an ABC correction to put in a wave 2 low. So if AT&T continues falling down, I'm looking to buy AT&T leap calls at 27.50. I'm going to have a stop loss below 26.08. I'm going to plan to sell half of them when AT&T reaches 33. I'm going to keep holding the rest of them until AT&T reaches the wave 3 target of 37.66. So this is a setup I've really been watching. If I think that AT&T, going 30 cents lower is going to be an incredible buy, that's another thing to think about when we talk about, being bearish to stock market, okay? I love AT&T here for leap calls if it goes a little lower for myself personally. So the count is that this is a wave 1, an ABC correction wave 2, a wave 1, an ABC correction wave 2. If I get to buy at 27.50, I'll be a very happy man. I'm going to put a stop loss below 26.08. I'm going to sell half and remove the risk of the trade at 33.24. I'm going to keep the rest until 37. And I might actually be keeping them a little past 37. That's why I'm buying such far out expiration dates, because this will just be wave 3. We'll have a shallow wave 4 correction, and then we'll expect AT&T to go much higher. Okay, one last name in the 5G sector that I really like is Nokia. So this is a long-term investment video for myself personally. I think Nokia is extremely interesting. Okay, I think a lot of you guys might laugh at that, but this is not a Reddit stock. This is a 5G mammoth, and look at these long-term Elliott wave cycles that we are seeing play out. Large degree wave 1, A, B, C correction, large degree wave 2. If we take the length of wave 1 and place it at the wave 2 low, Nokia is going to go to 62.34. So I love Nokia as an opportunity right here because it's at 3.92, and we're talking about a chance to make an incredible, nearly 20 times % return on investment holding till 62 without the option expiration risk. Okay, so this is a wave 1, an ABC correction, wave 2 low. If we take the beginning of wave 1, connect it with the high of wave 1 and the low of wave 2, we have gorgeous reactions on the median of the pitchfork, and now we are going to go back to the lower bound of the pitchfork. We are going to go back to the median of the pitchfork. Okay, so we have a lot of setups. There's even a few that I left out of this video, but these are my favorite long-term buy and holds for myself personally. It's obviously not investment advice, but we have a lot of setups to go over in the stock market. I'll be making videos all week. We were talking a lot about, hey, get some money ready to the side for a pullback, okay? Get some money ready to the side for a pullback. And now that pullback is here, we're in the low 380s. We are seeing a lot of opportunities, okay?